The story of artificial intelligence, AI, is centered around a select group of stocks known as the Magnificent Seven. Indeed, each of the following companies is disrupting AI differently: Amazon, Tesla, Apple, Microsoft, Alphabet, and Meta Platforms. Among the large-cap tech businesses, Nvidia is arguably the most significant participant. The semiconductor company is leading the way in generative artificial intelligence, AI. Its data centers and graphics processing units, GPUs, are essential to machine learning, accelerated computing, and other fields. With record-breaking sales in 2023, Nvidia has $26 billion in cash on hand. Let's examine how the business is allocating its earnings to support its long-term development strategy. 1. Voice recognition software. A few weeks ago, investors discovered that Nvidia owns a tiny stake in SoundHound AI, a business that creates voice recognition software. The business integrates its software into smart gadgets and works with restaurants and automakers. For a long time, big tech has demonstrated a strong interest in voice-activated assistants. Shazam and Siri were purchased by Apple, and Nuance was purchased by Microsoft in 2021 for around $20 billion. Furthermore, the technology is used by Alphabet and Amazon for their separate product lines of smart home products. With the estimated market size of $50 billion, and the fact that other big tech companies have made investments in technology like to SoundHound AIs, it's clear why Nvidia is acting now, while AI use cases continue to develop. 2. Humanoid robotics. Nvidia invested in Figure AI, a startup, shortly after hearing about SoundHound AI. Figure AI is creating humanoid robots that resemble the Optimus robot from Tesla. While humanoid robots aren't used in commerce yet, a lot of businesses are making significant investments in the technology. One explanation would be that, according to data from Goldman Sachs, the addressable market is anticipated to grow to $38 billion over the course of the next 10 years. Figure AI is likely of interest to Nvidia for a few main reasons. Nvidia's hardware combined with their underappreciated software company may be a special asset in Figure AI's robotics development. Furthermore, Nvidia's purchase is a significant move in the company's direction as it looks to expand beyond GPUs. Although I consider the chip industry to be its mainstay, Nvidia will need to prove that it offers other services and products that can grow as the AI market becomes more competitive. 3. Enterprise software. While corporate software is one of the most neglected areas Nvidia is investigating, many investors still view the company primarily as a hardware company. Nvidia took part in a $500 million fundraising round for Databricks, an artificial intelligence AI software business, in September. After the investment, Jensen Huang, the CEO of Nvidia, declared that enterprise data is a gold mine for generative AI. Nvidia's Enterprise Software Services division, which is currently generating $1 billion in revenue annually, gains a new dimension with the addition of Databricks. As the market for AI-powered services continues to grow, Nvidia has a lot riding on this connection, and it's not something that should be disregarded. 4. New product innovation. The A100 and H100 chips from Nvidia have been crucial to its expansion in the past 12 months. Though these semiconductor versions are very popular, the business is actively developing even more advanced technologies. The company is promoting its next chips under the Blackwell brand. Notably, Nvidia's H200 chips are said to double the H100's inferencing capability. Management informed investors during the company's fourth quarter earnings call that Nvidia intends to debut in the second quarter and that the H200 chips are already seeing considerable demand. Later this year, Nvidia intends to make a comeback with the debut of its most potent processor to date, the H200. 5. Supply chain. The supply chain is the final sector in which Nvidia is making investments. Because semiconductor companies are subject to larger patterns in manufacturing and technological spending, they are typically cyclical. Geopolitical concerns and COVID-related disruption have combined to cause strain in supply chains and logistics operations during the past few years. Nvidia has encountered difficulties in the past. Nvidia has had to make certain cost-related compromises in order to meet the soaring demand. To clear the backlog, the business has been increasing its spending. Although this involves locating chip components, it's crucial to remember that Nvidia does not produce its own chips. Rather, Taiwan Semiconductor is the recipient of this supply chain outsource. Considering how much Nvidia depends on Taiwan Semiconductor's manufacturing capabilities, it will be crucial that this partnership endures. For what length of time will Nvidia and its CEO, Jensen Huang, continue to hold the top spot as the industry's leading provider of AI chips? When Huang, who co-founded Nvidia in 1993 and has been CEO ever since, steps foot on stage of a Silicon Valley hockey rink on Monday to reveal new flagship products, the question of how long it will take will be crucial. It might be months, years, or even decades. It's the company's annual developer conference, which takes place in person for the first time since the outbreak. About twice as many individuals who attended the 2019 exhibition in person are expected to attend Nvidia's GTC event, with 16,000 expected to do so. A mere $400 billion separates Nvidia from overtaking Apple as Wall Street's most valuable business, with Microsoft leading the stock market. Nvidia's market capitalization surpassed $2 trillion in late February. Analysts predict that as businesses buy up Nvidia's top-of-the-line chips by the tens of thousands to power chatbots, picture generators, and other AI systems, the company's revenue would rise 81% this year to $110 billion. That is twice as much as analysts had predicted for Intel, the semiconductor manufacturer that drove the personal computer industry. Whether Nvidia can leverage its recent, significant lead in AI computing to establish long-term supremacy in a new computing era is the question. The B100, or Nvidia's next generation of high-end AI chip, is expected to be at the center of that endeavor, according to analysts. The chip, which is expected to begin delivering later this year, will be the brains behind the AI systems that Nvidia offers. Software engineers must wait months to use AI-optimized computers at cloud providers due to a shortage of Nvidia's current AI chips. Pricing details are unlikely to come from Nvidia, but the B100 is probably going to be more expensive than its predecessor, which retails for over $20,000. The shares of Nvidia increased by 83% in 2024, having more than tripled the previous year. According to LSEG statistics, Nvidia is trading at 34 times its forecast earnings, which is low compared to its PE of 58 a year ago, even after that incredible gain. Analysts drastically increased projections of Nvidia's future earnings are what caused the chipmaker's PE valuation to drop. If these projections prove to be overly optimistic, Nvidia's stock might crash back to earth. On Wednesday, the shares closed at $908.88, down 1.1%. Regarding Nvidia's recent financial performance, Bernstein analyst Stacy Raskin stated, "The biggest concern is the numbers have just gotten so big, so quickly you just worry they can't last. The more new products they got coming out at higher performance and higher prices, the more runway they have." In an effort to keep developers dependent on Nvidia chips, Nvidia is also expected to release a number of improvements to its nvda software, which gives programmers the ability to run their AI applications on Nvidia chips. nvda makes it more difficult to move from internal processors provided by Microsoft and Google to those sold by competitors like Advanced Micro Devices. Analysts are keeping an eye on how Nvidia develops its initiative to provide developers with cloud-based access to its processors and software, which it began selling last year. According to Ryan Shrout of the chip analysis company Shrout Research, the services side is really a software play. Analysts, he added, will be watching carefully to see if software and cloud providers are possibly getting nervous about Nvidia playing in their playground. Pertaining to business in China, whether Santa Clara, California-based Nvidia will be able to build a clear technological advantage over Chinese competitors is another important concern. China retaliated to Washington's decision to deny it access to Nvidia's most sophisticated chips by releasing chips from Huawei Technologies Co. that outperform Nvidia's 2020 A100 chip in terms of performance. As of yet, no Chinese business has made a claim to equal Nvidia's flagship H100 chip, which was released in 2022. However, observers in China anticipate that China will fall even further behind with the upcoming B100. According to Jimmy Goodrich, a specialist in China and semiconductors, the government knew very well that companies like Nvidia would be on an almost annual basis making improvements in their silicon, their software coding, and their application stack when they develop these controls. Over time, that gap will just become exponentially larger. The 2024 Annual Developer Conference is highly anticipated by investors as they look for clues about how the firm plans to maintain and possibly even accelerate its current development. The conference is much anticipated, as Chief Investment Officer Feinseth of Tigress Financial Partners notes. Taylor Swift is the only person right now who could pack more people into an event other than Jensen Huang. Nvidia's product launches are the big focus of the event, which has drawn thousands of guests. When the competition appears to be catching up to Nvidia, Feinseth observes, they just blast forward and ahead. He highlights that Nvidia is still a core holding in the artificial intelligence space and that it leads on everything, from software integration to dependability. After an almost 80% increase, investors are now watching for news that may spur the company's growth. That from the year's beginning, we have witnessed. Not to mention, following an incredible upward rise in 2023. Thus, nvda is available. Though it almost appears insignificant, the stock has been under considerable pressure both today and over the past few trading days. However, nothing appears to be halting nvida's upward trajectory at this point. Will the developer conference we have scheduled for next week provide us even another impetus for the stock market? Indeed, says nvda. I mean, there is a lot of excitement for this event. It will be lived for the first time in the next 5 years. I believe they are drawing in more than 18,000 visitors. The introduction of the new Blackwell 100 processor, which is anticipated to be much more potent than the forthcoming H200 CPU, will presumably be the main event. Some of the details are stated there by Jared B. Carey. It has been reported that the RTX 5090 may have between 50% and 70% more power than the 4090. All of this is to suggest that nvida continues to push the boundaries of cutting-edge technology. To what extent are they distancing themselves from the pack? Feinseth adds that nvida GPUs are what you'll want for your most important apps and data centers. Maybe you'll use a less potent CPU for secondary services. However, nvida is in the lead. Furthermore, the AI investing topic is still very young, and nvida is considered one of the key holdings in this space. Thus, this has contributed to the stock's remarkable rise. In conclusion, Nvidia's prudent management of its $26 billion cash reserve reflects a strategic approach to sustained growth and innovation. By investing in research and development, acquisitions, dividends, buybacks, and strategic partnerships, Nvidia continues to fortify its position as a leader in the semiconductor industry. As investors, it's crucial to recognize the company's commitment to maximizing shareholder value while driving technological advancements. If you found this video insightful, don't forget to like, subscribe, and share it with fellow investors to stay updated on Nvidia's journey and other valuable investment insights.